Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is David Kamara. Thanks for being on the show, David.
Thank you, Whitney. It's a pleasure to be here.
David bought his first rental duplex in 2006 and proceeded to buy a number of single-family houses. His career in management consulting was lucrative, but the excessive work travel and time spent away from his family drove David to search for a way to scale up his real estate investment strategy, which brought him into multifamily investing. Today, through his equity investment company, Cape Sierra Capital, David invests in apartment communities and controls over $25 million in real estate assets. David, welcome to the show. I know you have an incredible story getting to where you are at right now, and I think it's going to help many of the listeners as well. Looking forward to diving into that. Give us a little more about who you are, and let's learn a little more about how you got to where you're at now, where you came from.
Sure. Thank you, Whitney. So my mother is Ukrainian. I was born in Ukraine. My dad is from Sierra Leone, West Africa. My father was studying in the former Soviet Union. So I was born there and went to school there for the first year of schooling. At that point, my dad finished his studies and moved back to West Africa, to Sierra Leone. So I was not yet 8 when we moved back. And as a kid, it's kind of a tough experience. You're leaving all your friends behind, new language, new culture, all that. It was actually, I think, great formative experience because you kind of learn to adapt quickly and don't get too tied down to anything. But then Sierra Leone was great. West Africa was amazing. We did have some civil unrest, and in 97, we had a military coup just as I was finishing up high school. I was supposed to be going to school to study in Germany. That didn't quite pan out, ended up in the United States, but I can't complain. Things have worked out just fine. I guess, long story short, went to the University of Michigan, studied computer science, moved to Chicago, worked for a large company, did the corporate thing. Got into real estate then. We bought our first single family house, our residence. And I really got fascinated with the whole idea of being able to leverage and, control a large asset with a fairly little amount of money. So I went to a number of events then to try and get some more education. Not too long after that, we bought the duplex and threeplex. And my wife and I said, hey, this is kind of a plan. It will make sense. But of course, life happened. We moved back to Michigan in 2012. We had kids. We have 4 children now. And then one day we kind of looked back and said, hey, we didn't really continue that plan. We need to get back on there. So that's the short story. But many, I guess, paths along the way that brought us to where we are today. And
yeah, let's jump in there where, you and your wife finally discovered again that, wait a minute, we didn't continue on that path, but now, you have over 25 million, of assets under management or under your control. So give us a few points there of how now you all realize that this was a good path that we didn't stay on that path. Maybe we should get back on it. Obviously, you have done that now. Fill in some of those gaps.
Sure. So, what really happened was I went to business school, and that kind of led to a management consulting career, which, it's very exciting. You're working on large projects. You're working on things often that are in the news, and you kind of help shape the news with mergers and acquisitions and all these efficiencies that we're helping companies drive. I kind of got a little bit. The work was great. The work was very, very interesting. But then, the corporate politics, and you're dealing with large organizations. I ended up leaving and starting my own management consulting firm. And that was working really well until it was one Sunday evening when my daughter asked me, like, hey, Dad, are you going to work tomorrow? Which for me really meant, am I not going to see you for the next 3 days? And that was a tough question. So that's when my wife and I talked about it and said, hey, yeah, we're making good money. I'm no longer working for, quote unquote, the corporate man. But the goal here is not to not see you guys, right? I mean, the goal here is not to just make money. The goal is to have a high quality life. So at that point, we decided we should double down on real estate, and specifically not single family. We wanted to scale, right? So how do we do this with multifamily? So I went out, got like really examined the landscape. I felt like I could muddle through it, but it made more sense to go get mentorship. That way, we could accelerate progress. So I did that, and I mean, really never looked back. We bought a number of deals for ourselves. So I think we had the advantage of having some capital where we didn't have to necessarily do both things at the same time, learn about the industry, but also learn about raising money. So we did 4 deals on our own, which was very helpful in establishing track record. And then just people that I knew, people that I'd worked with through my consulting business, former consulting partners, former business owners or business owners that I'd worked with. They said, hey, this is really interesting. Tell us more about this. And that's how we got into bringing investors into our deals and syndications.
Give me a couple key things that helped you to have confidence in syndicating, that first deal. I know you said you hired a mentor. Maybe you could shine a little light there as well. And then, what gave you the confidence to syndicate that first deal?
Yeah. So I had, by this point, I already had about 150 units that we owned, right? And I mean, it's I think much easier when you can point to, hey, here are buildings that I have, here are projects that I've run the numbers, and I exactly know how they operate. And I have relationships in the industry. I have property managers that I trust, right? I think that gave me a lot more confidence to say, okay, while the plan was never to go start a business where we're working with investors, it actually makes sense, right? I mean, if people want to invest with me because they trust me and they feel like they want to diversify out of stocks or whatever the traditional investment avenues are, it made sense for us to entertain that, and frankly, it makes our money go a longer way as well. So really just looking at my personal track record in the space and being able to share that with individuals made that less of a frightful leap, right? But at the same time, it's different signing up to go buy an $8 million project when you have to raise a bunch of the cash, right? It's just a different setup. So again, I think I relied a lot on just the relationships I had and knowing that the people I was speaking to would come through. And also we were raising money, or we still are raising money at higher levels. So our minimum investment is typically $100,000. So the individuals that invest at that level don't tend to necessarily need that cash for their day-to-day. So they instill a bit more confidence in that they will come through, especially if it's people that I know.
Yeah, no, that's incredible, because it is, sometimes that first deal at first syndication is difficult, to have the confidence or figure out how to get that done. And things change for most people after that first one, right? Your eyes are open to so many more things. You've gained so much more knowledge through that first one. However, a lot of people don't get to the first one because of the lack of confidence, but, or guidance, and it sounds like, because you had done some other deals on your own, you'd already worked through the majority of that. And so syndicating that first deal wasn't that big of an ordeal, because you'd already been in real estate and made some stuff happen. Before we were recording too, you were talking about, and that's kind of along the same lines as well. People hesitate to invest in real estate, and especially right now during the pandemic, or all these things that are happening. I just thought you could speak to that a little bit now to the listeners, because I know that's weighing on everyone's mind, right? And why don't we just discuss that a little bit and you elaborate on that thought?
Yeah. So I mean, one thing is, I think, and this ties into your previous question, like the confidence to go do something, right? Personally, I mean, for me, it's my life story has been kind of relying on myself. I mean, I have definitely a good background and like good educational background, and I always knew I could get things accomplished, which goes a long way. But being self-reliant is key, and having some I guess gumption that you can not necessarily know everything up front, but you could find ways to solve problems, I think helps. With the pandemic in particular, right? I think as I speak to investors, right, a lot of people say, well, I mean, there's rent moratoriums and you can't really necessarily collect rents because of that, and the pandemic is destructive. And those things are all absolutely very true. But I was hearing those things from people before the pandemic hit, right? So, I mean, last year and the year before and years before that, I was speaking to people that I knew had money and were successful in their respective fields. And people tend to always come up with reasons why not to do things, right? So it's like, hey, I think the cycle is hot. I mean, everything is expensive. I think we should wait for a cool down. There'll be a correction. The truth of it is, at least the way that I approach this space in life in general, is you can't worry about things that you cannot control, right? So if I can't control the cycle, I'm not going to worry about when the cycle is going to be at the top or the bottom. I mean, all I can do is prepare for that, right? And put things in place to mitigate that, which means in our case, underwriting these properties in a way that we have some buffer and we have some slack should things not turn out exactly the way we expect them to. But specifically back to the pandemic, I think, so when the pandemic hit, all of our investors, we actually communicated to them that, hey, we are not sure how this is going to work out. So we're going to be ultra conservative. And frankly, we're not going to distribute any of the dividends for that quarter. Because it's better to conserve cash rather than us coming back to you and saying, hey, we need extra capital. And then a month went by and all the rents came in, and we went back to every one of our investors and said, here you go, here's your distribution. Things are actually panning out really well. I think what we've through the last 9 months is that people need a place to live, right? I mean, at the end of the day, like office space, we've all learned how to work from home, right? And hotels clearly are challenged, and restaurants are challenged and mostly drive-through, especially with the lockdowns right now. And retail is hurting too, right? Because everyone's shopping online. But at the end of the day, in the real estate asset space or the real estate subclasses, apartments are kind of the go-to play. I mean, I've had people approach us that really never heard of us before and found us because we are in the multifamily space, right? Because again, multifamily has had over 90% collections in the industry. So if anything, I'm very bullish on the space right now. And I think it's kind of vindicated itself and proven that if you're not in the wrong side of multifamily, which I guess is if you're in a place where your tenants are not extremely affected by some of these lockdowns. I mean, I understand there's a lot of people out there hurting who can't go to work because their place of business is shut down. I mean, those people would be hurting, right? And that's a real thing, and not to discount any of that. But the beauty of having multifamily investments is the diversification across tenants, right? So when you have 200, 300, 400 units, sure, you'll have a few people that fall into the category where you'll have to work with them and you'll have to help them with kind of putting them on a payment plan or whatever the case may be. But that's going to be a small percentage of who you have. If you're in we mostly invest in like the C+ and B- space for apartment buildings.
Yeah, diversification is a big thing, and not only across hundreds of tenants, but different properties, different markets, and even potentially different operators as well. As a passive investor, it's just an amazing way to invest. I agree completely. And I wanted to go back. You mentioned just like you cannot worry about the things you cannot control. Obviously, we want to educate ourselves. We want to be able to plan all those things, but it does cripple so many people from making any decisions. And I always stress, even to our children, like not making a decision is still making a decision. Right. And so how do you help that investor through that? Or could you give us a few tips there as far as, that investors that's like, that's just saying, David, I'd love to invest, but just with all these things, the global pandemic, all these things that are just so unknown, I just don't know this is the best time. Anything else that we haven't talked about there? I know we talked about great things about real estate investing, multifamily. Anything else that you would bring up during that conversation to make that investor see that this is, a great investment opportunity?
Yeah. So I think whenever I speak to investors, frankly, I mean, the way that I approach it is, again, it's not personal, and I don't try to tell people that, hey, real estate is the kind of one all be all solution to all your needs, right? In fact, I was very successful in the stock market, and just recently, frankly, I reached out to a buddy of mine I hadn't talked to in a long time, and I said, "Hey, we're doing this deal. What's going on?" And he said, "Hey, actually, I'm doing like 100% plus returns in the stock market right now. So, at this point, I'm just going to keep going with that." So, and that's totally fine. I said, "Hey, I can't compete with 100% returns. Like, that's not something we can do." But I think you have to be sincere and frankly transparent with people as to what you're doing, and you also have to educate people about what are the options out there. As a retail investor, there's just so much, right? There's just so many different things, and everyone has this information coming at them from various directions, right? People in their jobs have a 401k and they have certain advisors, and people in retail brokerages like TD Ameritrade, et cetera, have these funds and small cap stocks and whatnot. But I think when you take a step back, which I did, right? So my journey was really stock market, some single families, and then transition from single families to multifamilies, and then really looking at the two, right? And again, the thing that I realized with the stock market and what I didn't quite like it was I couldn't eat any of that money, right? I couldn't live on it, because once you start paying, once you cash out, right, you get hit with the capital gains tax, right? And once you actually withdraw that money, which most of us have in some kind of a retirement account, you get hit with an early withdrawal fee, right? If you take it out before you're 59 and a half, and you get hit with an income tax fee. So that money is just taxed so much that by the time it gets to you, yeah, while the returns sound really good in the stock market, they're just a fraction of that, and a significantly lower fraction. So what I tell people is, you really are fine with any investment vehicle that you're comfortable with. But one thing I try to open people's eyes to is the idea of try to have passive investments that you don't have to work for, right? The whole point is you don't want to keep on trading your time for money. So if you have something passive, then, at the end of the day, if you have enough of that coming in, you're pretty much done, right? Think of it as a cash flow monthly type situation. And I actually ended up creating this system called the personal cash flow, where I tell people how to think about it from a perspective of how do your monthly bills and your monthly expenses align to what your monthly income is from a passive perspective. If you can make that top number be higher than your expense number, then you don't really care about what number is in the bank, right? Because, you're done, right? If you're making passive money more than what you're spending, you can pretty much decide what you want to do. So that's what I kind of try to get people to. But I think the other aspect of the education is within real estate. I think a lot of people just bunch real estate into this one big thing. It's like, oh, well, real estate's risky, or I invested in a construction project and that is kind of frozen right now because of COVID, right? That's a very valid point, but we're not doing any construction, right? And yes, while you can make a ton of money in construction projects, I don't do that because, again, there's just many variables that I'm not familiar with. So what we try to focus on is small investments, or reduce the number of variables, not necessarily small investments, but get into projects where day one, we kind of know what those rents are, and then we can work from there and kind of educate people about the model of where the returns come from, cash on cash versus the appreciation on sale.
David, what's been the hardest part of this syndication process or journey for you?
That's a good one. So I think syndication in general is kind of, for me at least, not a very natural thing to do, right? So, and I think I've heard other folks talk about this, right? So you naturally kind of gravitate to things you're good at, right? And I don't know if there's any such thing as a natural salesperson. It's not comfortable, right? Most people think about, hey, I just want to do what I want to do, and why are you talking to me about this other thing? Well, for me, like I said, we didn't really start out trying to build a syndication business. People kind of came to us and said, tell us about this. We're kind of interested. We do want to diversify our holdings. And at the end of the day, I turned around and thought about it. Well, actually, these are people that we're serving, right? These are people that otherwise would be just in a particular investment class, which is fine. But this is a very good investment class, which most people are not exposed to. And as you know, in multifamily, the returns are often better than stocks. Frankly, better than stocks if you take into account kind of the volatility of stocks and the way that the stock asset class is not tax efficient. And then there's frankly a lot less risk. So in business school, they always talk about what's the alpha and what's the beta, right? What's the return and what's the risk? So multifamily investments are much better return, which with a lot less risk. So if you think about speaking to people about the topic from that perspective, it's not really a sales discussion, right? So my I guess approach always is I really am not trying to change anyone's mind too much. I'm just trying to open their mind to say, hey, you definitely don't need to go cash out of your stocks, but consider this other asset class and the returns there. So I think, yeah, back to the original question, syndication is challenging if you're looking to go out and raise millions and millions of dollars. I mean, in our case, that's not necessarily our approach. We are very comfortable with doing 1 or 2 deals a year because frankly, we don't have to. And that allows us to be a lot more careful about the deals we put people into. And again, most of these people are people that I know really well. So I take those relationships extremely seriously.
Of course. Yeah, it's just interesting to talk about, we're not trying to change an investor's mind, right? You're trying to open it to new opportunities and realize that we are providing an opportunity. We're not really selling anything, but providing a big opportunity. And I think that is helpful during that conversation with an investor. David, we believe that, to have a successful business, especially in real estate, you got to be very just disciplined. How did you gain such a high level of self-discipline?
I think I'd have to credit my mom. Excuse me. I mean, my mother always kind of instilled in me that you can accomplish whatever you put your mind to, as long as you put in the work. And so from an early age, I mean, that was definitely one of the key, I would say, things she instilled in me. And my dad was very supportive of it too, right? So my dad's a doctor in West Africa. So, and he is the first person in his family to finish college, go overseas to study, any of that. I mean, he came from not much. And when I say not much, that's understating it by a lot. I mean, he grew up in a mud brick house with no running water, any of that stuff. And frankly, nobody went to school. So I grew up with kind of the ethos that hard work is rewarded. And again, like I said, my mother was very instrumental in making me see that, sure, we didn't have much in terms of resources, but being able to rely on yourself and believing that you could accomplish much more than others with hard work, I think went a long way. That was proven further when I got to the States with $1,000 at 17, with not really anybody to help too much. There was a family from Sierra Leone that was very helpful and helped guide me, helped me with just those first few years. And I'm still really good friends with that family and really my best friend from high school from Sierra Leone.
That's awesome. I mean, you saw that in your parents, right? I mean, they had to be be very disciplined and determined to get to where they were at, no doubt about it. And then obviously that, you saw that and I'm sure heard stories from even before you were born and just learned so much. Are there a couple of daily habits that you have, David, that have helped you achieve success?
I would say that I could be better about being super disciplined about how I work, but I think I just get into a zone where if I know I need to get things done, then I establish those routines to get there. I like getting out in the morning and going for a run, and kind of that's my time to kind of reset, focus. I think I really grew into that while I was on the road traveling a lot, right? So when you're in consulting, you literally get on a plane and go somewhere in the country or sometimes out of the country. There's not a lot of routine other than you can wake up in the morning and kind of do something, go to the gym or go run. So that was my thing. I still do that. My wife and I go for runs all the time. We've moved that time now to lunchtime when we both have a break and we'll go do whatever, 5-6 miles. But really kind of I write a lot of things down, right? So I have a daily to-do list. And this is what is on my daily to-do list. And then I adjust that before I go to bed. And so I know what I need to get focused on the next day. That's been extremely helpful. I think feeding your mind with positive things, right, is very important. So whether that's podcasts, whether that's books. I think that kind of really helps program you as an individual. And I think, frankly, a lot of people don't do that, right? It's very easy to just succumb to whatever's on Netflix or wherever else, which I mean,
Right.
I think there's
Letting
value.
things happen to you instead of you making things happen. Right.
Exactly. And I mean, you do need a break sometimes, which I appreciate. Just you have to not always have a break.
That's right. We don't live on break, right?
That's right.
What's your best source for meeting new investors right now?
I frankly don't have a ton of necessarily brand new folks. So I guess I am fortunate in that through business school and through my consulting career, I've met a ton of people that I think are in that sweet spot for who I'm working with. So I don't necessarily, I guess, have it.
Yeah, that's all right. It's awesome that you have that investor base already established, and like you said, people that you know, and that love partnering with you and your.
Well, I mean, I think that's part of it, but I mean, I think more recently, so we have a platform, right? So through our website, I think, and the personal cash flow formula, that has attracted a number of people because, frankly, a lot of the people I used to work with in consulting, I mean, still work in consulting, right? And they make really good salaries. I mean, these are people that are making, I mean, large six-figure salaries, and they just don't have the time, right? They don't control their time. They're still kind of on a plane to a client like halfway across the country. So I try to speak to that audience because, again, I've lived that for many years, and I understand how difficult that is to escape because at one level you kind of have established a certain lifestyle, right? And you have a certain set of expenses, and you're a very high income earner, but you don't have the freedom to be there for your kids' recital or swim meet or soccer game, right? So that's kind of the folks that I speak to, and we definitely have had some traction because speaking to them and trying to explain the personal cash flow formula and this passive investing side has helped. And so I do have some new folks approaching us through that platform and on our website.
What's the number one thing that's contributed to your success?
That's a tough question. One thing, or the number one thing, looking for solutions, right? Being able to find ways to get things done, right? So like I mentioned, I mean, my story is not unique in that I don't have a family with a lot, right? So I kind of had to figure things out. But I think the number one thing is being able to think through what is important to get you to that next step, right? And find the solutions to get you there. So whether that's great perseverance, whichever, I guess, words we want to describe that, but it's really taking a step back and evaluating your situation, right? If you keep on doing the same thing, are you going to will you be getting to what you want to get to? And having the belief that you can get there, right? Because some people kind of see it, but they're like, I don't know that I can get there.
It sounds like it goes back to mindset, right? It's so much about what you're focused on and the willingness to push through and so many things we've already talked about. But what about, how do you like to give back, David?
Well, so I am just a kid from Ukraine and Sierra Leone, right? So I was always the kind of, in Ukraine, I was the dark-skinned kid. In Sierra Leone, I was a light-skinned kid. The way that I like to give back is, so my dad still lives back in Sierra Leone. My dad's a doctor, and he has the calling to just help people in need, right? He could have been elsewhere in his life, but he really wanted to be back there and help the folks he grew up with. So my sister and I actually have built a hospital back in Sierra Leone, which we fully funded. My sister raised some cash. I raised some cash. And it's been great to see that up and running. And so a couple of years ago, I took my whole family back. I have 4 kids, I have 4 girls, and my wife had been back before. But for my kids, I think it was very eye-opening to have them see where their grandpa came from, right? And frankly, where I spent over 10 years of my life, just to have the contrast of opportunity available to people, right? So when you see, I think when you come from a place of very little opportunity, you kind of get to appreciate that. So one way of giving back has been supporting that hospital and my dad in his work to continue to give back there. Another front has been for us, really, so now I mentor a lot of people that are aspiring real estate investors. And I think the biggest thing, I think you touched on it, was that first deal, right? So most people struggle with the first deal. So I mentor people and try to help them get to the first deal, because once you do that, then back to what we spoke about earlier, your mindset changes. You know, you can now do it. It's no longer just that pie in the sky. You've already accomplished it. So once you get to the first deal done, you're in a different place. So those are kind of the two ways primarily I focus on give back. I run around a lot of marathons, my wife and I. So especially a couple of years ago in Sierra Leone, we had the Ebola crisis. So I raised some money. Doctors Without Borders, Médecins Sans Frontières. So that felt good. Just little things. I think little things help.
Oh, that's awesome, David. I appreciate you sharing that. It's an incredible way to give back, and appreciate your time today with us as well. Tell the listeners how they can get in touch with you and learn more about you.
Sure. So my website is Cape Sierra Capital. It's a nod to Sierra Leone. So CAPE Sierra SIERRA capital.com. And while you're there, you can grab my free ebook. It's called The Personal Cash Flow Formula. And that's at Cape Sierra Capital/cashflow. Make sure you check that out when you live there.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.